Good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 and the NASDAQ 100. It's being recorded on Saturday, February the 3rd, 2024. To say that the markets were not bizarre, unusual, but yet following patterns that I would use in describing a market approaching a top. We saw rejection of economic data. We saw rejection of earnings reports. We saw the embracing of other earnings reports, producing wild swings in both the S&P and in the NASDAQ, creating a situation for me that I was putting in, we're all done with a primary B wave, to having to take it all back as the market rallied very intensely from the revealing of Meta's year-end earnings report. And the big surprise with Meta's earnings came the fact that Meta has now decided they're going to pay a dividend on the stock. I read a little bit deeper into everything that kind of took place at Meta. And it does seem that, they're going to continue to lay off people. They're trimming and at the same time generating revenue that overcomes the losses that they're having with the metaverse, the virtual reality side that is Mark Zuckerberg's project, and it's been number one for him for quite some time, and he's not going to move away from it. In fact, he continues to make gain ground on producing a product that's going to be widely used. Nonetheless, the company did produce some pretty good earnings, and that, along with the dividend, took that stock up $80 plus in a matter of hours. It was quite impressive. And this is against a backdrop that there were other companies that also picked up on the back of the good earnings, but also because they also reported decent earnings, both of those being Microsoft and Amazon. But we saw those bounce a little bit back and forth more than we saw in Meta. Then along came Friday, and Friday was an expiration. And because of the earnings reports that we saw, and actually Apple also reported, there was a lot of activity about how we're going to interpret all of this and where things are going to expire. Meta was soaring up over $60 and then pushing higher from the opening on Friday at several points, being up $80. Apple was like cruising lower, was down an additional $5 or $6 from where it closed on Thursday afternoon. And it just was wild. It was crazy. We saw things going on in the treasury markets where after the Fed decision and meeting and press conference on Wednesday, it kind of turned the treasury markets into a recession risk off mode, where we saw the 30-year and the 10-year and futures markets just soar up over a point on each one. And at first I thought, okay, I get the recession risk off, but I also thought, maybe they're just feeling that rates, the rates aren't going to get cut when they are, but eventually that they aren't going to get hiked so much anymore. So it would have been safer just to kind of put the money back into the 30-year bond to lock yield. And so that, there are a lot of traders. It's like they have, pension funds, they have mutual funds, all kinds of different things. And it was like, okay, well, let's go lock this yield if we're feeling that the rates will stabilize and then start to come down later. Well, then came Friday and we saw the total reversal of that thought, that idea, that trade, uh, where the both the 30-year bond was down over 2. The 10-year note was down over 1. And this is after gaining on Wednesday and Thursday. So we're getting these gyrations, these very strong changes overnight and total reversals overnight. As we did basically even in the equity market, that I made, a call, so to speak, that, okay, we're all done with the primary B waves and we should start to head lower. Now, having said that, I also left open the possibility and that we still had Apple, Amazon, and Meta to report on Thursday. Well, we know the balance of that story. Now, I just want to stick to a technical look at the S&P, both cash and the futures, along with the NASDAQ, both cash and futures, because both continue to really reflect a market or markets that are in a finishing mode versus new breakout. We got just so much good going for us. And that's the disbelief, I think, in what really is going on and what we really are looking for. Now, I'm adding into all of this that there are short-term cycles, like monthly cycles, even shorter, that up to like 4-year cycle, that some are peaking and then showing that they're going to be heading lower. And that peaking was basically within this first week of February. Now, yep, we saw February 1st and 2nd, Thursday, Friday, but then we have actually the beginning of February, and it goes through next week as well. And so a lot of these cycles are peaking and will begin to put downward pressure, cycle down pressure on the markets. And I think that in turn will either begin a pullback or signal a complete tone change. Now, what we have sitting out there yet to come in terms of Mag 7, we only have one that's left to report, and that is NVIDIA. And NVIDIA on Friday decided it too would go up pretty massively. It closed up 31. Now, granted, when you're looking at a stock like NVIDIA, it is as well as in all-time high territory. Never been here before, every tick, new high. So things can seem to get thin. And when the options are exploding and the movement is coming via the options and the hedge needs to come on, and that hedge may be buying and or selling, the market is thin. Because again, we don't really have somewhere where we can hang our hats on and say, well, that's resistance or this is support. So, it really falls to in my view, it falls to what's happening within the options markets. So again, it returns to a conversation I've had before. It's like, well, who's leading who? Is the equity market leading the options market, or is the options market leading the equity market in terms of pricing? So there's still a great deal of volume being churned inside these options. We still have 0 DTE options. We still have options that expire on Monday, Wednesday, Friday. We still have weekly expirations. We still have, of course, the monthly expirations. We have the quarterly expirations, etc. So this remaining in place, the use of options for day trading, for swing trading, for just position trading has grown exponentially. And the players have grown exponentially, from retail to institutional to large trading firms. The use of algorithms has also expanded. That do the searching for the trades, and when the prices match up, the trade is executed. And next thing you know, everything we get to see what's happening in the movement. Algorithms are controlling, are put together to measure and control volatility, how much volatility gets put in or taken out, as accordingly to what's happening within the all of the underlyings within the index or the ETF. So again, things move much quicker now. Now, this is just my view. Um, and there are a lot of adjustments to be made when you're trading and things are getting crazy because we see these moves and then we wonder, wow, is propelling an index to just turn on its heels and run to new all-time highs. Again, new all-time highs under volume that really is not, it isn't really consistent, because you would think of like a move like that, boy, everybody's jumping back in. And it's like, no, the volume is not registering that. The market internals, by the way, are not registering the intensity that we're seeing in terms of the rallies. So these are flashing a warning sign, a caution flag, whatever you want to call it. This is what I'm seeing. A lot of caution flags in terms of the underlying strength of what is going up versus truly what's happening when we take an internal look inside of the index. So I'm just going to go technical here. So I'm going to start with the SPX. I'm looking at the weekly, so just in case this is your first time that you're checking in with my work. Thank you, welcome. And I want to just go over my big picture. Now, on an Elliott basis, I continue to view the SPX, or the S&P 500, as being in the process of putting in a cycle degree fourth wave. Now, what the cycle degree fourth wave will consist of are 3 waves of primary degree to be labeled A, B, and C. So on my chart, you can see that back in October of 2022, the market completed primary wave A. So the rally from October of 2022 to current, we have been involved in a primary B wave. The B wave will exist of an ABC structure of an intermediate degree. Those are labeled in the yellow. The primary are the green, and the cycle are the red. So we're staying within, there's intermediate wave A and intermediate wave B of the larger primary B. So we're in intermediate wave C up to complete the primary wave B. What will that primary intermediate wave C consist of? 5 waves of minor degree. Now I'm going to start bringing this down. I'm going to bring it down to the 4-hour chart. I'm just going to open it up, right? There is the intermediate B wave. Here is the layout for the C wave. And remember, 5 waves of minor degree, which are labeled here in this light orange color and using Roman numerals. So we have minor wave 1, 2, 3, 4. So we're within minor wave 5, the finishing wave, to complete intermediate wave C, which in turn will complete primary wave 5. So we're going to complete minor wave 5, intermediate wave C, primary wave B. So here we are. Now within this minor 5th wave, we have 5 waves of minute degree. 1, 2, 3, 4, and yep, I have put that label back here on minute wave 5. But I should put parentheses around it. And now I'm going to go into that detail here. So to all of this, I begin to add, and I'm going to slip back out just to my daily, I add Fibonacci. Now the Fibonacci calculations begin to show us, so we have relationships between all of these waves. Particularly, we have a relationship between, that we can just look at retracements for primary wave B. Now on that one, all we have left is that, because primary wave B, and I can just actually go one, let's just show it, because it actually has been so exceeded. We have it way down here. So the most common fib on any level, right? So the most common fib on a wave C to a wave A, that's where we make a comparison, wave C to wave A. Well, 100% for that came in at 48.18. That is where wave C would be equal to 100% of wave A. Well, it went up and beyond. So I could leave it there, but it's no longer valid. It's been exceeded, and it's been exceeded by a fair amount. So what do we look at next? Is that the B wave will form what Elliott described and called an irregular pattern. Irregular in terms of that this B wave would create, in this case, a new high above the start of that previous wave A, and that was at 48.18. That was the high in 2022. That at the time was the all-time high. And the market began to correct in what we continue to look at as an cycle degree fourth wave. Now, the internal, this B wave, is producing what I would call an irregular, and certainly is now, because it has exceeded 48.18 by a fair amount, reaching a high on Friday at 49.75. This is the cash market. So it's exceeded it by a fair over 100 S&P points. Now, when we're using Fibonacci, we can then start to go like, okay, we exceeded 100%. What are our next Fibonacci levels that would be used for an irregular B wave? Well, the first one would be that wave B will be equal to 1.236 times the length of that A wave. That comes in at 5,130, I'm going to call it. And then the second one is that it comes in at 1.382 times the length of that A wave, and that is 5,325. Now, I start to also build additional Fibonacci relationships, that being that internally within this B wave, we are in an intermediate C wave. So again, I'm comparing wave C to wave A. And those come in that wave C would be equal to 100% of wave A at 52.19. Okay, so that means we got a little bit more to go. Now I continue to build on my Fibonacci relationships, but I'm breaking down and I'm going inside this C wave now. And now that I have minors 1, 2, 3, and 4, I can run Fibonacci that are going to tell me the relationship between minor wave 5, which is where we're in, as it relates to minor wave 1. Those are the relationships. That a fifth wave will be related to a first wave. So I can run those extensions by going up and capturing the move in the minor wave 1 and then pulling it over and attaching it to the low of minor wave 4. Now I have calculations for minor wave 5. Now, I'm going to bring it back down, and I'm going to go right away to a hourly chart, because we're now just inside this minor fifth wave. And I'm going to apply again the same principle that I have my minute wave 5, and I can put up Fibonacci's that are going to coincide as to minute wave 5 is related to minute wave 1. The most common comes in that it's called equality, where wave 5 will be equal in length to wave 1. That level right here is 49.61. Now I can go back that we have minor, that was on the minute level, and we exceeded it. Came back down to it, but we exceeded it, so therefore it was fulfilled. Coming down one more to the minor degree, where minor wave 5 would equal minor wave 1, was 49.69. It too was met, exceeded, came back down below. So now I have two levels, and I do basically have a wave pattern that can be counted as complete, which would be 1, 2, 3, 4 right there. It doesn't look good, but it truly is. And then the fifth. So yes, I can say, but without 100% certainty, because I'm leaving no room that anything within this fifth wave is going to extend. So on this basis, yes, I can count 5 waves up and it's pretty clean and it all matches up on a fib basis to minute 5 to minute wave 1, and then coming out here, minor wave 5 as it relates to minor wave 1, and also completing 5 waves. So again, match up. Could this be it? It can. But caveat, we need to allow for additional upside for several reasons. I think that we're going to see that follow through because I believe the NASDAQ and the S&P are so closely related via the high-tech companies. The big, massive tech companies are common to both indexes. And in the NASDAQ, which I will get to in a moment, definitively I'm leaving room open, and you'll see why, because I do not think that minute wave 5 over in the NASDAQ is complete. So that I have to leave room here as well. Now, if I need to do that, does that suggest that we're going to go to back above 5,000? In one manner of speaking, it does suggest that. And should it happen, I mean, I don't know if there remains a call wall at 5,000 here in the SPX. As of Friday, I was brought to the understanding that there was a call wall at the 49.60 area, which that was kind of, right there, right pretty much where it closed. So does that deal with that particular one? And yet we still have another that may get pushed come Monday, Tuesday of next week. Now, in terms of earnings, what truly is left that could rock this market? And it really comes down to NVIDIA. It really now comes down to how much further do they want to go deeper into Apple, or do they want Apple to recover as we begin to move forward into this first quarter? Amazon, same deal. Are they going to continue to build? Are things going to go, et cetera, et cetera? But I think more importantly, we're going to have to start to refocus on the interest rate conversation. As we're seeing such a switch and a flip around inside the treasuries. One day it's like, oh no, the interest rate, the inversion is changing again. What the inverted coming back, or is it lessening, or is it getting narrower versus expanding? I would say on Friday it expanded again. So still, that all needs to come to some type of resolution. So a lot of it's just like, where were these conversations going and how will the markets react? So based on that, do I think that this, if it still is in existence at 5,000, that would be SPX, by the way, folks. So it's the 5,000 call in the SPX. Now, is that really the February expiration, which is February the 16th, the monthly, or is it being rolled on a weekly basis? I do not know. In any case, that's out there. Now, on a Fibonacci basis for the minute wave 5, our next level is 5,033.50. So 5,030 to 5,033 to 5,035 in that area. That would be where minute wave 5 would be equal to 1.618 times the length of minute wave 1. Now, minor wave 5, where does that start to come in? Well, now we're going to go up Now we got a couple of additional levels here. If this market just continues to push itself higher, then we have the primary B wave resistance at 51.31 or 32. How does that relate? Well, we have a minor fifth wave would be equal to 1.618 times that first wave at 51.49. Now catch this. These have been matching up now, right? Here's the 100%. 618, nah, doesn't really match up. And the fifth wave comes in at 5,033. And if that caps it, stops it, and we nosedive off of that level and a massive rejection, then everything else will fall into place. Because again, it's the minute fifth wave that once that fifth wave is complete, it will have then completed the minor fifth wave, which will then have completed the primary C wave, intermediate C wave, and then the primary B wave. And those all, because of structure, would be complete, whether or not they meet this level. It is still going to be considered a primary B wave and an irregular primary B wave because it is exceeding and has exceeded that high at 48.18. And now it's kind of moving substantially above it. It's over 100 S&P points, as we said. Now, having put that into place, the market internals, they're not, this is an all-time high. Okay. We had a lower high. There we had the higher high to that one. Well, that was 49.07. Then we nosedived. Okay, so here we made that higher high, and look at that high. Lower high. Now we made another new all-time high, and against that high, lower high. Higher than the previous. Yep, we got it. But then that was 3, 4. Okay, works for the 5. But in terms of when the relative strength was strong, we haven't exceeded it. Relative strength, right? So the relative strength of what's happening, not getting back to those levels. The MACD, yes, reset, as one of the subscribers to this channel spoke about. And I do encourage you to read the comments because there are a lot of very good analysts and a lot of good analysis being presented that we complement each other, and I will speak to them. And one day I was speaking on the MACD, and I felt that how it was not really showing us that there was a buildup of strength. And the subscriber commented saying, well, it kind of looked like it was going to reset. And I found that to be extremely interesting and extremely accurate at the same time, because what did the market do? It reset and it went. It went. Now, here again, is it capping? Is it kind of topping out here? So that flat, just because of the rejection that we got after reaching a new all-time high, market started to reject it. But we'll see. If it rolls over and starts to come down, it's going to give support to a downside move. Now, again, one last thing on an Elliott basis that I cannot, and please understand why, I can't say that this is 1, 2, 3, 4, 5, and it's minuet wave 1 of minute wave 5, and we continue to blast higher. I cannot discount that and say, no, that can't happen. I am looking for a top, but I can't tell you that that top won't come in another 150 points above where we are. And that suggests, so it's all going to be dependent on actually what the market does. The market is going to lead us to where we will be able to establish a high, a top, and start looking down below. We start to get a breakdown, and it even comes in one afternoon like it did here and just crush it. This is 2 days. This was on Wednesday, late in the session. Then we have Thursday and Friday. So they got to 48.45, and then we're looking at 49.70 in 2 days. I was like, wow, S&P, nothing like packing on over 100 points in 2 days. In 2 days, and under thin volume, I would think, for that type of a move. What does that tell us? It's not so unordinary. And the reason being, again, we're in uncharted territory. So if you don't have a specific reason to sell because you're hedging something, but you're just going to short this just because you want to be short, I wouldn't, unless I could hedge it. Who's to say it doesn't go another 100 points? We don't have enough signals to suggest that's it, we're done. I'm building a Elliott and Fibonacci case for it, but look at what I've got to leave open based on those same Fibonacci calculations. So I am looking for a turn for sure. So what can we think here in terms of, we have 5 up? Well, I can open this up just a little bit so we can take a look at it. And let me put in some fibs that would show, okay, what if we just get a small retracement, like a wave 2 retracement? Well, first of all, we have 49.44, 49.25, 49.17. If it's just going to be like a minuet wave 2 of minuet wave 5, well, we could come back into here. 3825618. We can go all the way back to 48.95 for that matter, and still be a wave 2, and then go for the gold. And maybe that takes us down to by the time NVIDIA is going to report. Let me just double check what that date is. On the 21st. On the 21st. Monday's the 5th. So we basically have 3 weeks. 3 weeks before NVIDIA reports. And that could be drop it down to here. Now, again, let me just also add, if this is all done and we start to come off and we get down towards the 21st, and maybe we are down here. And NVIDIA, as everyone thinks, is going to blow the doors off. But again, it's going to be balanced out by what's happening in the balance of the market. If everybody's now moving into a corrective phase and NVIDIA all by itself decides, nope, we're going to stop and we're going to rally because we just had really good earnings, it's putting a lot of weight on the power of that company. And yes, I expect like AMD, other chip makers to follow through, but even that type of a move begins to get old. If we're correcting for specific reasons, if we're correcting because the market's perception of what's coming. So there's going to be a big difference. So again, if it is minuet wave 1 of minuet wave 5, then yes, we're looking for a 2, a 3, a 4, and a 5. And could we end up here? Absolutely we can. Yeah, we can. And markets like new highs, it's just, yeah, go for it, go for it, go for it. And I will add that the higher it goes, the stronger it's going to fall. That's been my experience. And as I've said before, I have been a market maker on a trading floor, so I have traded previous major tops and major lows. And the market action leading up to those highs and after reaching those highs wasn't as severe or as jerking itself around as I'm seeing now. Now, does that kind of lean towards, okay, well, we have a new ways that a lot of things are traded, right? Everything is algorithm, and it is quantitative, and they're the ones that are really out there finding the trades, doing the trades, etc. Versus back as a market maker standing on a trading floor, yeah, that's where the change came from. It was the perceived feelings from crowds standing in pits in our country here in the United States, but also globally. Trade was global, but trade wasn't as global as it is now. So a lot of differences. So in any case, I think we've done 5 up. I think a pullback is in line, and I think we could start pulling back. So we look for, in the cash market, 49.45-ish. We have support here at 28 down to 17, and that 618 is a different number, doesn't go with this one. But this one, the 50% is 49.10, and then 618 is 48.95. Now, I kind of would think if we still had some serious upside to put in, that the 48.95 needs to hold. And that is if saying this is a 1 and we're coming down in a 2, which we know wave 2 can be between 50% and 62%, 50 and 62%, 49.10, 48.95. Now, we'll pay close attention to these levels. Let me go over and look at the S&P. The S&P gets to trade when the cash market doesn't. It's basically the same deal. Again, everything coming up to this level, all the same in terms of the Elliott. Now here we have minor wave 4. So we're in that minor wave 5 of intermediate wave C of primary wave B. So within that minor wave 5, we have 5 waves of minute degree. There's 1, 2, 3, 4, and 5. Even cleaner in the futures market than it was in the cash. Because now I'm back on the hourly chart, and I got a 1, I got a 2, 3, 4, 5. Now, looking at the fibs, same deal. Minute wave 5 would be 100% of minute wave 1 at 5,001. Well, it got up to 49.99. Minor wave 5 would be 100% of minor wave 1 at 49.92. Well, it got up to 49.98. So in my book, it's like, yeah, both of these levels were met. This one overshot by 6, and this one missed it by 3. Split the diff, right? So can I say 1, 2, 3, 4, 5, minute wave 5 complete, and then stick a minor 5 and stick it all? I could, but I'm holding out because I would really like to see more rejection to come. It was an incredible expiration on Friday. Is there going to be an attack towards the 5,000 level? We got close. Are they going to go back and try to push it and get through it? Both on the cash market and here. I think here is just going to be stops. It's not like the call will. We have to consider where and how much premium will be left in this future versus the cash, because it's 5,000 cash market. And the cash closed at 49.58. And this closed at 49.72. So we still have just under 20. So if we're looking at 5,000 basis to cash, what are we looking at here in the futures market? 50-10, 50-15, possibly, maybe even 50-20, 5,020. And can I put together any type of a resistance? Well, right now, not really. Unless this is 1, 2, 2, 3, 4, 1 of 5, 2 of 5, and we're going to go. There's that. So again, I'm leaving it open. That's why I'm only putting that 5 on, because I got 2 levels met here on a minor degree and on the minute degree. The balance still has room, and there you have it. Here's the primary B, and that's at 51.16. So I think if we get above 5,000, folks, there's just nothing there. Market's never been here before. It could move very quickly. And that could just be short covering, for all I know, right? So again, when things get into new high territory, as we saw in Meta, that's all new all-time highs, which, by the way, just in case you were wondering, Mark Zuckerberg, the CEO of Meta, he picked up $29 billion on Friday, well, between Thursday afternoon and Friday. $29 billion. Got it added to his bank account. Now, what will be interesting to see, are we going to start to see C-level and Meta start to unload a lot of their stock? Are we going to see some of the, you've been holding this for a long time and you're going to start taking profit, and now because you want that bunker on an island in the Hawaiian Islands that you want to buy, whatever. Now, we did hear that Jeff Bezos is going to come in. He's selling 50, I think it's either 50 billion. No. He's got a lot of stock, 5 million shares of stock or something like that he's going to sell of his Amazon stock. How much is that going to add to him? It's pretty incredible, the levels that we're at and the amount of stock that's still being held by C-level people in these companies. In any case, we have to leave open the potential, excuse me, that we have. If they're going to attack 5,000, we do have that resistance still at 5,001, but that's just, can be taken out on stops, and it's still not going to equal 5,000 in the cash market. That one's going to be pushed a little higher. All right, moving averages. Let's go over and check the daily for those, and then got to move on here. I'm going to open that up. The two nice bars. Okay, left a little bit of a tail, not too bad, sitting right in the middle, bottoming and topping. But that bar gave us every clue in the world that we were going to see the follow through. But again, now we've met two levels of resistance that could complete the move. Maybe we get to come down. But first thing we got to break is the daily 8, which is sitting at, excuse me, which is sitting at 49.27. And below that, we have, where are you sitting? The 20, which is at 48.54. The 50s at 47.71. So you see, we've got them all spaced out, which is pretty, continues to give support to a rally. Again, we're getting close. All right, over in the NDX. All right, here we are, NDX. I'm on the daily. It is, I will go out to that weekly chart. It's the same. We're looking at, I need to change this back over again. This, I moved to a third, which will put the fourth there. And this put it could be a fifth wave. That's an outside count. I'm sorry, because I showed it and didn't, and I don't want it because I've taken it back. So this again is cycle wave 1 or cycle wave 3. I think it's a cycle wave 3 I had here as well. And this is a cycle 4, similar to what we're seeing. And so, sorry that I really needed to change this back over and it did not, but I can still go over. This is primary A and this is a primary B, and here is intermediate A and B. And we are inside that intermediate C wave, taking the market higher. Now, I'm going to bring it down to the daily chart, which does kind of get rid of that and leave this open for me. Now, I'm filling back in. Here we have for the primary B wave, and those are those fibs right there. And so we have 1.236, and that's at 18,250 or thereabouts. And they have 1.382, and that's at 19,180. So those still plenty of room. Now, I'm going to bring this down. I'm going to put it on the 4-hour chart so we can start looking again at internals, because what we have going on here is we have with the inside this intermediate C wave, minor wave 1, 2, 3, 4. We're inside of minor 5. Inside of minor 5 is going to consist of 5 waves of minute degree, of which we have 1, 2, 3, and 4. And that's where I had to stop. We've not yet taken out this high, which is 17,000. Is it this high and this high? 17,665. And if we did, oh, this is the cash. It's 17,009 and something on the futures market. On the cash market, we did absolutely inch our way to a new all-time high there at 17,682. We did that on Friday. But it's not completing this. That's the 4 hour. I want to drop it down to the hourly chart, and I want to get inside all of this. Now, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So I'm really looking at we probably still have one more high to put in. And where do I balance that out? Well, minute wave 5 would be 100% of minute wave 1, so we're not there yet. That's at 17,771.71. That's a lot of sevens. And I'm telling you, if you have any faith, you're like, wow, I'd like to see that number. But in any case, I'm sorry, I digress. 17,777.71. That's the 100% where minute wave 5 would be equal to minute wave 1. Let's go take a look at minor wave 5, where it would have been equal, where it was equal to minor wave 1. It's been exceeded. I put it back up because it was 17,534. What did it do on Thursday? It came down and nosedived right back through it. Right? So I'm like, okay, so does that put the 5 there? Could have, because we rejected back below that level. Failure and all, but no, here we go. Boom. Let's just keep taking it and go with it. Now, this is why I'm not calling it in either market, because there still, I believe, has got to be one more leg up in the NASDAQ. And that does project to clean up and get itself above 17,000. It is, it's only actually, why is it? Oh, this is still the cash market. To get itself above, cleanly above here, and then up closer to this. I think we do need to get above 17,700 in the cash market. Here again, not the best of the internals as we're making new all-time highs. All right, so there's that high. We eke out a new one, lower high in the RSI, and a lower high in the MACD. The internals, I'm telling you, the market internals are not stellar, are not convincingly telling us, get out of the way, we're going. The caution flags are waving fast. All right, so still looking for upside. There's a target. What's up next above all of this? If we got to go to the minor wave 5, because we've exceeded 100%, the next most common is 1.618, and that's at 18,328. Well, okay, what else is up there? 1.236 for the primary B wave. That's at 18,257. Minute wave 5. Okay, we have the 17,777. But if it breaks that level on a nice strong push, the next level, right? Okay, all this dark matter in here, because there isn't anything, takes us up to 18,178. Which would suggest we just blast, we just go above 17,900, 17, and on and reach 18,000 pretty dang quick. That's kind of what it tells me. Now, can it do that? You know, they could walk in on Monday and just go like, the hell with the world. We're going. And they just find the push, find the capital that's going to be placed into whatever. Is Meta going to go up another $50 or $80? What if it does? It could. So again, we've got levels that fit everywhere. 1.618, 1.618, a little bit below, and then we've got the B wave in between. So there is a cluster. If this doesn't hold and we break above all of this, see, there's nothing there, then that's our next cluster. Above that, we're kissing the stratosphere in terms of the market. And you can see how resistance starts to really spread out. But we have them. We've got the levels. Okay, we've got levels all the way up to 19,600. I'm not going there right now. So that's in the cash market, by the way. We see the internals, not very supportive of this thing just really continuing, but it could be on cruise control via Meta and NVIDIA. If Apple starts to recover, we're going. It'll go. Right, over in the futures market, a little bit different, but still basically telling me we have additional upside to do. Here's why. This is 17,665, and this is 660. I tell you, I saw higher levels, and now they're not showing up. I find that interesting. Over here, we got to 678, so we have made new highs against the wave 3, but I don't think it's over yet. And interesting, I got that same level, 17,770, 777.71. Now that I find very interesting. No, come on. All right, 100%. This is the cash market. Over. This is the E-mini future. Now it changed. Thank you very much. Let's go back. You see, I did change it, and then it didn't come up. Now we got the right numbers. My apologies. 17,793. That's the high of wave 3. This was actually a failure. This, to me, how high did we get? 17,775. We're still in a failure. So this is where it gets really kind of interesting. Because again, I got a 1, a 2, or 1, 2, 1, 2, 3, 4, 5 of 3. That was how I counted it. So let's go in and take a look, right? 1, 2, 1, 2. And that's kind of weird because it doesn't break it. Got real close. So 1, 2, 1, 2, 3, 4, 5 of 3. 4, 5 of 5. Okay, following? So you can see that. We need to get above that. Minute wave 5 will be 100% of minute wave 1 at 17,929. So we're going to have a little bit more upside. Another 200 points. And with the index up 250 on a downtick from Friday, maybe the fun continues on Monday and they run it up and we get a more concrete high. RSI, there's the high. Lower high, but still a lower high here. Over here, we tried again. We didn't even get as high as we did on this shove. There was that high, then a lower high. MACD, looking like it wants to puke. So market internals are not very supportive of what some of these individual stocks are doing. Now, having said all that, again, 1, 2, 1, 2, 3, 4, 5 of 3, 4, and I've marked it. Did I do it correctly? I don't think I did. So let me take this off. If we're just in a little bit of a third wave correction into a fourth, it's 1, 2. So I'm really going to take it from here because this is like 1, 2, 3, 4, 5 of 3. So that would be from here. And I'm going to put up fibs. And I'm going to put them up here. So 382 brings us back to 17,579. But I wouldn't be surprised to see it kind of come in or even hold here. 17,654. And then we rally back up. We rally back up and get ourselves back up towards this level. Or at least 17,800. Let's break that high, put in a new high. Give us a little cushion up there in terms of putting in a decent high. So again, that's why I'm still leaving open the S&P, because this is the market I think we need additional upside. Ah, and this, my friends, is pretty much my whole story for today. And I don't want this to be extremely long. I'm trying to keep them a little bit reasonable. I want to go out to the daily. We want to take a look at this to see where our moving averages, you see, kind of broke below the 8, got back above it to finish just above it. It did break below. If it continues to break below, we got the 20, which should provide some pretty solid support. And if we're putting in a smaller little bit of a correction here, then that's where we're going to find some support. Also at 17,220, that would be a pretty strong drop. Now we're sitting at 680, 687-ish. Yeah, 687. That would be a pretty strong drop. So I'm thinking, maybe down to, where are we? Yeah. We have 579, 519, 458. I think that ought to contain it. And then shove it up again, shove it higher. So the moving averages aren't bad. They're all kind of still in alignment for this to get up there and to finish that whole shebang. Folks, that's where I'm going to complete this. Again, unless something really strange happens within the Globex session tomorrow, which will begin at 6 p.m. Eastern. The next update, it'll be the Elliott wave update, and it'll be on Monday, February the 5th. Have a great balance of your weekend.